So today we are continuing with our journal entries. In the last video, we saw how to write a journal entry. Today we will see how to write entries for some specific cases. Okay, so case number one is bad debts. Bad debt is the amount which is not recoverable. So it is written off. Bad debt, basically it will be a loss to the business. So loss is nominal in nature, right? So a bad debt account will be debited and the debtor who owes the company the money, his personal account will be credited. So, when the entire bad debt is irrecoverable, then the journal entry will be bad debt account debit to debtor's personal. However, when a part of the debtor, when a part of the bad debt is recovered, then only the unrecovered part will be treated as a loss. So bank account will be debited with whatever X amount that our debtor is paying us. Bad debt account, the unpaid amount to debtor's personal account, thereby writing off his debt totally. Now our debtor has had a reversal in luck, and he is paying us back our entire debt. So money is coming back into the business. We will debit cash or bank. Then the journal entry will be bank account debit to bad debts recovered. Now, in the next case, cash or goods withdrawn for personal use by the owner. Anything which is withdrawn for personal use by owner will be termed as drawings. So, drawings account will be debited, and if cash is withdrawn, cash will be credited. Cash is a real account. Whatever goes out will be credited. And if goods are withdrawn, then purchases account will be credited. So drawings account debit to cash account if cash is withdrawn and to purchases account if goods are withdrawn. Now in the next case, sometimes companies give out their goods as charity. So how much ever the amount of goods you are giving out as charity, that amount will be reduced from the purchases. So a new account, charity account will be created. It is a nominal account in nature, and any expense that is in and all expenses are debited. So charity account will be debited and purchases account will be credited because goods are taken out from the purchases. Next case is distribution of goods as free sample. Usually, businesses, as part of their promotion and marketing, do give out samples of their goods for free. So, in such a case, we create a new account called advertisement account. It is an expense in nature, so it will be debited. And the journal entry will be advertisement account debit to purchases account. Now, the next case is loss by theft. Supposing our goods are stolen or there's some fire breaks out in the godown and the goods are burnt. So, the whatever value of the goods lost will be debited. So loss by theft / fire account debit to purchases account because our goods are reducing, right? Now usually businesses take insurance. So if they have taken insurance, then the next entry that will be passed will be insurance account debit to loss by theft. And when the full claim is given by the insurance company, then bank account will be debited and insurance account will be credited. But if the insurance company does not pay fully, then how much ever money they are paying will be debited and then the loss will be debited to insurance account will be credited to close the insurance account. Now in the next case, purchase and sale of fixed assets. So what is the entry we pass when we purchase an asset? Asset is coming into the business, right? So fixed asset account debit, cash is going out. So cash will be credited. However, if we are purchasing the asset on credit, then the supplier account will be credited. When the asset is sold, money is coming into the business, right? So cash or bank account will be debited and the asset is going outside the company. So the account will be credited. Now, any expenditure on installation of the machinery or while constructing a building will be added to the cost of the asset and that will be debited. Next is sundry expenses. Sundry expenses basically mean refer to petty expenses. Sundry expenses often refer to petty expenses like maybe postage or some cool drink, conveyance, etc. It is not desirable to record such expenses in a separate account. So these kind of expenses are generally debited in one account called sundry expenses. So sundry expenses, it being an expense, will obviously be debited. So sundry expense account debit to cash account. Next we have outstanding expenses. These expenses are those that relate to the current year but they have not been paid until the year end. So what will the journal entry be? Expense account debit to outstanding expense account. Outstanding expense is a liability and any increase in liability is always credited. So that's why outstanding expense account will be on the credit side. Next we have prepaid expenses. Expenses that are paid in advance are called prepaid expenses. And note, prepaid expenses are in nature an asset and any increase in asset will always be debited. That's why prepaid expense account is being debited here. In this accounting period, we are paying for the next accounting period expense. So in the next period, we won't have to pay that money, right? So in a sort of way, it becomes an asset. Next entry is accrued income. Accrued income is that income which is earned but is not due. So the journal entry, in accrued income in nature is an asset. And remember, any asset will always be debited. Any increase in asset will be debited. So accrued income account will be debited and income account will be credited. For example, interest on investment has become due but it has not been received. So the journal entry would be accrued interest to interest on investment. Now, the next case is income received in advance. Like I told you in the last few videos, income received in advance is a liability for the firm because it has not yet been earned. Thus, it'll be credited and income account will be debited and the journal entry will be income account debit to income received in advance. Next we have interest on drawings. If owner of the business draws any amount for his personal use, it's called drawings. And due to drawings, capital of the business is reduced, right? So in some cases, companies charge interest on these drawings and it will be a gain for the business. All gains are credited as per the nominal account rule. Therefore, the journal entry would be drawings account debit to interest on drawings. Next, we have interest on capital. Interest on the proprietor's capital may usually be paid. It helps to know the efficiency of the business and how it is performing. So, whenever interest is allowed on capital, the following entry is passed. Interest on capital account debit to capital account. Then we have depreciation. What does depreciation mean? Depreciation is the normal wear and tear of an asset with the course of time. Okay. So if you purchase a car in 2024, do you think its value will still remain the same in 2030? No, right? Its value will diminish. So that reduction in value is known as depreciation. Depreciation in nature is a loss to the company. So it will be debited. Depreciation account debit to asset account. Now that we have seen all these cases, let's solve a question which will cover all the concepts that we have discussed, right? 2014, 1st March. And please note the pro forma. Journalize the following transactions in the books of Gupta Brothers. So I will write on the heading in the books of Gupta Brothers journal. Then I have my date, particulars, ledger folio, debit column and credit column. Under the date I have written the date. What is the transaction? Okay. So started Business started business with cash rupees 30,000, goods worth rupees 15,000, and furniture worth 20,000. Okay, so this is a compound entry. Okay, and we have three assets here. So first we will write cash account, debit. How much is the cash? 30,000. Stock account, debit, 15,000. And furniture account, debit, 20,000. To capital account. We'll add up all these figures. 50 plus 15 is 65. 65,000 is the capital. Being business started with cash, goods, and furniture. Now the next entry. Okay. Now the next entry, 2nd March. Paid into bank 7,000. So bank money is going into the bank account debit to cash account. 7,000, 7,000. Being cash paid into bank. Next transaction is on 3rd March. Bought goods from Mohan Brothers on credit. Bought goods from Mohan on credit. So purchases account will be debited. Purchases account debit 6,000 to Mohan account. Mohan Brothers. Because we are purchasing goods on credit. A liability will be created being goods purchased on credit. Next transaction is on 4th March. Sold goods to Doyal brothers on credit. Okay, now we have a credit sale transaction. And what is the journal entry for any sale? Cash slash debtor account debit to sales account. Here, since goods are being sold on credit, a debtor account will be created in the name of Doyal. Doyal brothers, they are receiving goods, so that's why they will be debited. 6,000 to sales account. Okay, I have made an error in the amounts. Purchases was 6,000 and cash deposited in the bank was 20,000. So my apologies. This is 7,000, 7,000. Being goods sold on credit. Next transaction. Okay, now the next transaction. 5th March. bought an old delivery van for rupees 10,000 for delivering goods to customers. So that means this is an asset for us. So I will create delivery. What do we do? What is the journal entry when we purchase an asset? Asset account debit to cash. Delivery van account debit 10,000. They have not mentioned whether they have paid cash or bank. So I am going to assume it is cash. 10,000. Being a van purchased for delivering goods. Next transaction. 7th March. Received from traveling salesman for goods sold by him after deducting traveling expenses 150 rupees 3000. Okay. So what this basically means is sales. We have hired, the company has a traveling salesman who goes door to door selling goods for cash. He has made a sale of rupees 3000 and his expenses incurred by him are rupees 150. So we have to pay him 150, that will be our expense. Traveling expense account debit rupees 150 and we are receiving cash, okay? Cash sales. Cash is coming in, so we will debit cash. Cash account debit 3000 to sales account 3,150 being cash received from traveling salesman after deducting his expenses. Okay, now next transaction. 9th March, drawn a check for rupees 800 for personal use. Okay, so now in this case, I have to tell you the difference. Okay, cut that. Drawn a check for personal use. So that means it's a drawing, and since the word check is being used, it means bank. So drawings account debit rupees 800 to bank account rupees 800 being check drawn for personal use. Now the next transaction is Doyal brothers gave check deposited in bank 6,000. So we will write the entry. Goyal brothers have given a check which has been deposited in the bank. So bank account debit because money is coming in. So bank check is going into the bank. To Mohan brothers. They lie. To Goyal brothers. Who is giving the check? Goyal brothers. Okay. So to Goyal brothers. For the amount 6,000. What will we write in the narration? Being check received by, being check received and deposited in bank. Check received and deposited in the bank from Doyal brothers. Next entry. 11th March. Paid to Mohan brothers by check 6,700. Discount allowed by him is 300. So that means this is the this now we are receiving discount. We're receiving discount means it will be an income for us, right? So the discount received will be credited and we are paying back our creditor. So debit the receiver is the rule, right? So our creditor account, in this case, the creditor is Mohan. So Mohan's account will be debited, cash account will be credited 6,700, and then the discount received account will also be credited because it is in nature an income. So the journal entry will be Mohan account debit to, since we are paying by check, we will write bank account 6,700 to discount received 300. And on the debit column, we will write 7,000. Being check paid to creditor. In the narration. Now for the next transaction. 13th March. Paid for repairs of furniture. So now repairs of furniture, it is a sundry expense. It is an expense only in nature. So I will create a separate account called repairs. Repair account debit to cash account because cash is going out for my repairs. 200, 200. Being amount paid for repair of furniture. Next transaction. On 13th March, we have received an order for goods from Mahesh for rupees 5,000. This we will not be recording in the books because there is no actual transaction happening here. We have just received an order. Unless any cash is being exchanged, we won't be recording that in the journal entry. Now the next transaction is 14th March. On 14th March, we have sold old newspapers for rupees 80. Now this is really a sundry income, I should say. So it's a very petty item for me to open a separate account like Raddi. I can't write no Raddi. So I will create a sundry receipts a sundry receipts account. So cash account debit 80 to sundry receipts 80 being the cash earned on selling old newspapers. Next on 15th March, interest received from bank 400 rupees. Okay. So bank account debit 400 to interest account. Whenever you get your bank interest, it will be credited in your bank account only, right? That's why we are debiting our bank. Being interest received on bank account. Next transaction on 16th March. We have paid rupees 300 for expenses on goods sold to Goyal Brothers. This amount is to be realized from Goyal Brothers. Okay. This amount is to be realized from Goyal Brothers. We paid 300 rupees for expenses on goods sold. This amount is to be realized from Goyal Brothers. Okay, so what this means is maybe on delivery we have incurred extra 300, but usually the customer should pay this amount. So Goyal Brothers will be debited because he is owing us more 300. That means that makes him an asset. And since we have paid the money, cash account credit 300. Being expenses paid for goods sold to Goyal. Next transaction on 19th March, we have bought goods from Sohan Lal and Sons for rupees 400 and we paid cartage on these goods for 50 rupees. Okay. So purchases account debit 400, cartage account debit 50 rupees to Sohan Lal because we have bought the goods on credit. Sohan Lal and Sons. And the sundry expenses we have paid the cartage, right? So cash. We will credit cash account to cash account rupees 50. Being goods purchased from Sohan Lal and Sons and cartage paid. Next transaction is on 20 March. Bank intimates that the check of Goyal Brothers has been returned dishonored. Okay. So Goyal Brothers had given us a check worth rupees 6,000. Okay, over here. Now that check has been returned to us dishonored. So what will we do? We will reverse this entry. Okay, whatever entry that was passed in this on March 10th, we will reverse that entry, thus nullifying the effect. What was the entry? Bank account debit to Goyal Brothers. Now Goyal Goyal Brothers account will be debited for the same amount 6,000 and bank account will be credited 6,000. We are just reversing the entry. Being check dishonored, so Goyal Brothers still owes us money now. On 21st March, the delivery van bought on 5th March met with an accident and it was sold as salvage for rupees 500. Okay, that's really unfortunate. So, what is the journal entry for sale of an asset? Cash account debit to asset account. So, here, but in this case, our asset could only recover 500 rupees. Okay, and we have purchased it for how much? We purchased it for 10,000 rupees. So it is a loss for us, right? We could only recover 500. So the amount that we are recovering, first we will write that cash account debit 500, then loss, profit and loss account, then profit and loss account debit, because we bought this asset, we bought the van for 10,000. Now we are recovering only 500, means it is a huge loss to us, right? To van account, to delivery van account 10,000. We have to close the delivery van account, right? We are selling the asset, so the asset will be credited. It's going outside the business. Being delivery van, being cash received as salvage on delivery van after it was wrecked. Okay, next entry. 22nd March, paid rent by check. Okay, so rent account debit. How much is our rent? 600. To bank account, 600. Being rent paid by check. In our next transaction, which is on 23rd March, we have salaries. Salaries for the month of February remain unpaid, rupees 300. So what does that mean? It's outstanding. Salaries are outstanding. So salary account will be debited 300 to outstanding salaries. Outstanding salary is a liability, right? So that's why we are crediting it. Being salaries for the month of Feb, now our next entry, next transaction. We have paid municipal taxes in cash 800. 25th March, municipal tax account debit 300. Oh, no, it's 800 to cash account because they have specifically mentioned that they have paid in cash. Being municipal tax paid in cash. 31st March, depreciation charged on furniture at 10% per annum. So, like I said, assets they do keep depreciating. Now, what is the value of our furniture? Depreciation calculation. Furniture value is rupees 20,000. Now, depreciation is charged at 10%, so that makes it rupees 2,000. So, our journal entry will be depreciation account debit rupees 2000 to furniture account because the value of furniture is reducing. Being depreciation charged on furniture. Now, what is this last line? Received an order for goods worth rupees 5000 from Sham and received rupees 1000 as advance. Okay, so we have received an order. Again, an order is not a transaction, so we cannot record that. But however, Sham has paid 1000 rupees as advance. That we will record. Now, that 1000 rupees that we have gotten in advance is an unearned income for us. So, it is in a sorts a liability. Cash account debit 1000 to Sham account. Once we sell goods worth 5000 to Sham, then that time we will adjust the entry. Being advance being advance received from Sham in cash. So usually you will get a question in your exam asking you to write journal entries. So this is the pro forma that you have to make. If there are any notes or any transaction that we are not recording, like in the case on 13th March, in this case, in this transaction, we have to you need to mention a note, and then any working note, any calculation like depreciation, you'll have to write that separately. This is how journal entries are written, and this is your basic. So this is how your journal entries should look. If you have any doubt, please feel free to reach out to me in the comments. And that's all for today's lecture. See you in the next video.